entrepreneurship is extremely, I cannot say how many extremely, infinity difficult. This is great that we're doing these podcasts and so forth, but this whole space, sometimes I feel like it gets over glamorized. Don't lie to yourself, right? Set yourself clear milestones as to what you need to achieve in a certain time frame. And if it doesn't work, be comfortable to walk away from it. Don't get emotionally attached to it. If you get in too deep, then it becomes very difficult to walk away. You need to be very clear from the start in terms of why you're doing what you're doing. Right? It can't just be about making money.
Welcome to the Sandpit Startups podcast, where we journey into the minds of the brightest and the best the region has to offer. It's our mission to connect the founders in the studio with the founders listening at home. We sincerely hope the next half an hour motivates, educates, or inspires you. And if it does, you know where the follow button is.
In this episode, we are with Siddiq Farid, the co-founder of SmartCrowd, which is a real estate crowdfunding platform. This platform allows users in the UAE to treat investment of properties like stock portfolios. So now you can own a property by investing as low as 500. What's great about this is that you can make money through rental returns and property appreciation. This app, according to me, shouldn't be called SmartCrowd. It should be called Genius Crowd. Really love the idea. Thank you for joining us, Siddiq.
Thanks for having me. This is exciting. Happy to be here.
Awesome. So Siddiq, we're going to start hot and test you almost.
Sure.
I want to hear your elevator pitch. Tell the
all right.
people exactly who you are, what the USPs are.
Yeah, so SmartCrowd is a very simple mission. We want to give everybody the ability to invest beyond the traditional asset classes like public equities and fixed income. If you look at the haves and the have-nots, the big difference is the haves have the ability to build diversified real estate, diversified investment portfolios. That includes obviously your public equities and fixed income like everyone else, but they have access to alternative assets, real estate, private equity, and so forth. And most of them will have significant allocation to there because that allows them to manage their risk better, generate more returns, take on more risk, and grow their wealth. Whereas an average person is stuck with your traditional asset classes and don't have that ability to do so. Think of real estate, right? For many, it becomes the most significant purchase of their life.
Yeah.
And for many, it becomes a very concentrated part of their investment portfolio. Even if they're buying an investment property, we can have a debate about owning your home to live in, whether that's an investment or not. But even if you are able to invest, it becomes a very big part of your portfolio concentration risk. And what we're trying to do is change that game, right? Everybody, even with $50,000, $100,000, should be able to build a portfolio that mirrors something that someone has $5, $10 million to invest. My background is finance. I'm a chartered accountant, CFA charter holder. So this came out of a personal need. I wanted to invest in real estate. Realized, well, hold on, I need to either get financing or I need to put large sums of my money into one particular asset. And you've heard the saying, never put your eggs in one basket.
Yeah.
So that's where the idea came about. And looking at this market where traditionally in this part of the world, hard asset investing meaning physical assets, is much preferred over paper equities and so forth.
Yeah.
Yet many people struggle to get on the property ladder. So like you said, it seemed like a very obvious option and a big gap in the market. And we decided to venture on this. And the reason we called this SmartCrowd was, it's funny that you say it's a genius crowd.
Yeah.
The idea is to get everybody to become a smart investor and be part of that smart community. So we're making smart investment decisions. So a lot of things that we do is not only giving you an opportunity to invest in this, but at the same time, educating people, empowering them to make their own investment decision and better investment decisions.
Well, the best bit about SmartCrowd, I feel it's very similar to crowdfunding, like we have for startups.
Yeah.
So there is Kickstarter and whatnot. But it's much riskier when you invest in startups compared to a tangible asset like properties, right? So I feel that the investor feels much more safe than they would be putting in a startup. But I'm sure the logistics behind the scenes must be not that easy.
It's very complex, yes.
Yeah.
So you're right? So if you look at it, from a risk matrix perspective, right? So it's very exciting that there are opportunities for people to be able to have access to invest in the startup ecosystem.
Yeah.
I think it's quite exciting. But like you said, it's an extremely risky proposition. Even the most sophisticated of the VCs of the world, struggle with this. The returns are very, the distribution of the returns is vast,
Risky,
right?
yeah.
There's like massive risks in this, right? For every 10 investments you make, you'd be lucky to get one
One of them
success,
to be
right?
successful,
And an
yes.
average person doesn't have enough money to spread across multiple investments. So it is a very risky proposition. Not to say you shouldn't do that. You obviously need to look at your personal opportunities and so forth, your personal tolerance from a risk perspective and what your goals are. But real estate is on a risk matrix. It's relatively lower risk.
Yes.
In terms of it's asset backed.
Mm-hmm.
It provides a steady rental income.
Yeah.
And there is obviously opportunity for capital appreciation.
Yes.
Like everything else, it goes through cyclicality.
For sure.
Right?
Yeah.
But if you look at historically all over the world, real estate on a long-term basis has always gone in the direction, top right
Yeah.
on a graph.
Yeah.
Even Dubai, to a certain extent, right, has gone through a couple of cycles.
Yes.
But if you take a long-term view, it's trending. If you draw a line
Yeah.
from these curves,
Yeah.
it is heading maybe not this, at a steep slope in more
Yes.
mature markets, but the market is maturing.
Yeah.
And this cycle is very different from previous cycles as well too. So it does allow people to sort of the idea there is, so if you think about it, let me break it down a little bit. Like if you have $100,000 of investable capital,
Yeah.
by doing what we are doing, where we're fractionalizing the real estate asset class, now you can think, hey, I can take some money, put it into public equities,
Yes.
which are fairly liquid. I can take some money, put it into a security deposit, earning a fixed income. I can take some money, take a little bit of risk and
Yeah.
invest in a few startups that I like or I use, etc. And then you know what? I'm going to also invest some in real estate. That's going to bring me a steady flow of income to mitigate my risk in other places. Historically, that's not possible for people to do with $100,000.
Yeah.
But now you can.
We're going to take a brief break to hear from our sponsor, Middle East Advisory Partners, top-tier advisors servicing the owner-managed, family-run, and SME sector. Here's Paul Donnelly to give you the tip of the episode.
Plan carefully. Develop a solid business plan outlining your goals and strategies.
If you'd like an experienced advisor on your team, reach them at me-advisorypartners.com.
And what sort of returns does probably an average investor expect from
Yeah,
this
so
fractionalizing?
it varies, right?
Yeah.
Dubai is a very diverse place. So a return for what you would get in a property in Marina is very different from what you get in downtown, in Palm, in JVC,
Yeah.
etc. So on average, Dubai returns on average are 6.5% or so.
Which is good. Yeah.
And then, depending on the areas you go, the kind of rental strategies,
Yes.
long-term, short-term, etc.
Holiday homes, they
Exactly.
Really higher,
So it can vary from low 6 to as high as 10, 11% in some properties, right? Again, and the beauty of what we offer is, hey, why get exposure to only one property?
Yeah.
Come onto our platform. You want to invest 50,000 dirhams. You can effectively put 10,000 dirhams in 5 different properties. One in downtown, one in Palm, one in JVC, and really diversify within that.
Yeah.
So not only are we giving people access to get exposure to real estate, but
Yeah.
within that, you're also getting further diversification.
Yeah.
If you look at the alternative, okay, you have enough money to buy a property. That's great, fantastic. You go buy one property.
Yeah.
The worst, you probably mortgage that.
Yeah.
I say worse because you're adding more risk when you take on leverage.
Yes.
But you have one property. God forbid something happens to that property or doesn't perform well, you're exposed to one.
Yeah.
Indeed.
Whereas what we offer is exposure to multiple properties. So even if one is not performing well, the other 4, 5, or 10 are doing fantastic, potentially.
Yeah, and another fact that I would probably like to add is usually when you make an investment, you try to see that if you can beat the inflation of the particular country. Like, for example, if UAE has 3.5% inflation. If I put it in a bank, it does not beat that by a huge margin. But if I put it in a real estate investment, and if I can diversify by investing in different kind of properties with such returns, it makes it more lucrative to put in the money.
100%, right? If you, I don't know if you follow some of the famous investors, Ray Dalio. Or
Yes.
the
Quite a famous one.
cash is trash. That's what he says. Again, right? Like, don't want to belittle, cash is cash at the end of the day, right? It pays bills.
Yep.
But you're right? The whole idea of your money is you need your money to work for you. So you retain your purchasing power. And it's a very simple concept. You'd be surprised how many people don't understand that concept. One of the rude awakenings of jumping into this into SmartCrowd and starting this. I come from a finance background, so I take some of these things granted. And when you launch this and you start talking to people, my biggest shock was the low financial literacy level among adults.
Yes.
It is extremely shocking.
Really?
Like basic concepts of what you're talking about, inflation,
Yes.
risk versus reward,
Correct.
like rate of return, right? Like how do you differentiate between two assets giving you 7% return?
Yeah.
How do you
Weigh
if
the
Bitcoin's giving you
benefits,
7% return and real estate's giving you 7% return? Bitcoin might sound exciting, but it's only giving you 7% return. This is a real estate, which is less risky asset, giving you 7% return. From a risk versus the reward that you're getting, you need to be able to understand these things.
And make a
You don't have to
decision,
quantify it very mathematically, but just simple common sense. And it's it's shocking that how many people don't understand that.
So
Just to wrap up that inflation point, right? And if you look at historically, most real estate or other tangible assets are known for protection against inflation. Because as inflation comes, that's increasing, the cost of construction, cost of land, the cost of replacement. So everything gets inflated with it. So it's always a good hedge against inflation. So your money, you keep 100,000 dirhams in the bank account with 3% inflation every year. You can only buy so many apples with the $100,000 today.
Exactly.
In 5 years, you'll be able to buy less apples. Right? Whereas you put that money into an asset that's giving you a return higher than what the inflation rate is. Obviously, it's growing, it's accumulating, and if you're disciplined enough to compound that, 5 years later, you'll be able to buy much more apples than you could have if you just kept that money in the bank account.
For sure.
we're going to take a brief break to hear from our sponsor, Inheden. Hey there, visionaries and dream chasers. Meet Inheden, your ultimate partner in turning your visions into digital realities. They're not just another IT company, they're your growth partners and a tech angel invested in your success. Are you looking to expand your business or create an unforgettable user experience? Well, Inheden has your back. With optimized software development, cutting-edge design, and a blend of in-depth research and marketing, they're here to help empower your ideas. If you're curious, head over to inheden.io. That's INHEADEN.io for all the details and get started with your dream project today. Dream, empower, inspire. Inheden. So you said there's a low level of financial literacy amongst the adult population out here. When you're trying to do a...
Globally, not just here.
Oh, is it?
Yeah, globally.
So when you're trying to introduce like a whole new concept, there must be a crazier level of education that you have to go through.
100%.
How are you finding that challenge?
Yeah, so I'm a first-time entrepreneur. Some other rude awakenings, right? For other aspiring entrepreneurs that are listening to this.
Yeah.
Hey, this is a fantastic idea. Everyone I spoke to, like, yeah, that makes sense, right? We built all the setup, all the legal regulatory setup, everything, etc. Launched the website, and then like, hold on, why aren't people coming and buying stuff on the website, right? It's like, well, no, you have to go out and promote and raise awareness, etc. and so forth, and educate market, because it is globally, this whole idea, this whole concept of investing in real estate online is a very niche, very nascent industry.
Yeah.
It hasn't been around just over a decade, right? In the grand scheme of things, it's relatively new.
Yep.
Global awareness is not there either. So getting people to think, hey, I can buy real estate online, like I can buy shoes on Amazon. It's a very novel concept that it takes a lot of convincing. People need to get comfortable. And we're talking about bigger ticket sizes, right? Like buying stuff on Amazon, 50, 100, 200 dirhams, etc. Here we're talking maybe potentially thousands of dirhams that people are putting online. So there is a big education curve there. And one of our focus in terms of our marketing strategies as well is to do a lot of content.
Okay.
So we do webinars, we do a lot of content, education, etc. Even on our platform, we're not just putting up properties there. We support it with lots of information, investment reports, etc. Because what we believe is a well-informed, educated user, investor on our platform is a much better investor. So if they understand the importance of saving, the importance of investing, the importance of investing and diversifying into real estate, the product sells itself. You don't have to do any work. So, and you get an investor for life, because historically these are long-term investments, right? So if you convince the person, hey, this is the right thing to do, the product sells itself, and then they become repeat investors. So if you look at our platform, average person has 4 investments on the platform.
Okay.
Almost 70%, 65% of our user base are repeat investors on the platform. We have done approximately, we're getting near 150 million dirhams worth of transactions on the platform.
Okay.
And I would say about 85% of that has come from repeat investments.
Awesome.
Right? So that just shows a stickiness because people like it. It works.
Yeah.
They're getting return. You put money in, you start getting returns. And then if you're disciplined, you compound it. You know, in 5-10 years, you'll have a nice sizable portfolio that's giving you a secondary income
Yes.
that you can use to subsidize your lifestyle, pay for holidays, etc.
Exactly.
And the goal is eventually at a point where you build enough, not just necessarily with SmartCrowd, but your entire investment portfolio should be that it's essentially substituting your income. So you have what I call real financial freedom, right? It's not about becoming extremely rich and wealthy. The whole idea of what we're trying to do with this is to give people the ability to really pursue their dreams, right? Like a lot of us wants to do stuff that we like to enjoy, etc.
Yeah.
But we're hesitant because we are slave to the paycheck,
Yeah.
right?
Yeah.
So very difficult for us to take those, you know, hey, do I really leave my job and go really try to do something? I have to take a step back, a pay cut, etc. But you can't because you have obligations. You need to earn a certain amount of money, etc. But if you're able to be disciplined with your money, generate secondary source of income, subsidize your lifestyle, then you're like, you know what? I can afford
Yeah.
to take a step back or and pursue something I'm really passionate about, right? Because that's what it's all about, right? Otherwise, why we're doing what we're doing, you know, 9 to 5, etc., killing
Absolutely.
ourselves. It's not, it can't be just about money.
Yeah. So Dubai is a really healthy place for startups to thrive, I suppose. And a large part of the founders will be first-time entrepreneurs, just like yourself. But it seems that you've sort of done very well on your, you say your first time
venture,
entrepreneur, but yeah, your first venture.
Jury's still out there.
Yeah. So what would you say to them in terms of what they should maybe be looking to try and do for them to have a successful first time round as well?
Yeah, so Dubai is a fantastic place,
Yeah.
right? Like I've said this many times. I couldn't have picked a better place to start my entrepreneurship journey. And you know, for better or for worse, we were among the very early fintech startups,
Yes.
so to speak, right? We were the first applicant of any sandbox in the region. We were first of 2 companies to graduate from a sandbox to get a license.
Okay.
You know, you have to understand what we are trying to do is very new, very novel concept.
Yeah.
You know, and we have multiple stakeholders that you have to deal with: DIFC, DFSA, DLD. For people that don't know that, DIFC is the financial center, DFSA is the regulator,
Like the SEC.
Exactly.
Yeah.
Dubai Financial Service Authority, and then DLD is the Dubai Land Department. Dealing with 3 different stakeholders, government entities, etc. Right? Like it took us 2 years to get a license to convince all these people, hey, listen, we're trying to do some value add. This is going to be good for people and for in the industry and so forth. It's a little bit easier, a little more forthcoming, but you know, very very early on in the process. But you know, this place is fantastic for the opportunities. A relatively small market, but it has massive potential. And I've said this many times to many people, is that I personally think if you do things right, you have a better success rate over here than other bigger markets, etc. Because everything is new, and if you do things right, you can really take advantage of that and really grow. And there's a lot of support from not just the private sector, but particularly from the government. Right? There's a lot of programs, etc., to support, etc. Having said that, entrepreneurship is extremely, I cannot say in how many extremely, infinity difficult.
Yeah.
You know, this is great that we're doing these podcasts and so forth, but this whole space, sometimes I feel like it gets over glamorized.
Yeah.
Right? Where we share all the success stories, but there's
The highs.
there's massive failures as well too, right? And there's nothing wrong with that. We should talk about that. If you look at one of the successes of the Valley in the US and so forth, failures is embraced.
Yes.
A failed entrepreneur will probably raise money quicker than a first-time entrepreneur because
They know what not to do.
They know what to do.
Yeah, exactly.
What decisions not to make, etc. and so forth. And investors are very comfortable giving failed entrepreneurs more money because, hey, they've learned their lesson.
Yeah.
They'll be better next time around.
100%.
Right?
We often
and
hear
failures
that.
can happen for various reasons, right?
Yeah.
We often hear that like entrepreneurs that don't know when to call it quits,
Yes.
when to just admit that what they're doing is failing.
That's a
often
very
just waste
important
their
point,
time.
Sam, right? So I want to touch base on that as well too, right? Because it's also, the whole failure element is a cultural thing. So that's going to take some time
Yes.
for us to get comfortable with it. Failure is not a bad thing. It's an experience. Any failure is an opportunity for you to learn.
Yeah.
If you don't learn, then it's a wasted opportunity. So we should embrace it. We should talk about it openly, share it. On paper, we might feel like very success story, etc. I have massive issues, etc., challenges, etc. We're still not out of the woods. We're still a growing startup. It's tough, right?
What's the quote? It's like, I haven't failed 1,000 times. I've found 1,000 ways that don't work.
Not to do exactly, right? That's the right saying.
That's a quote.
But it's very important if you're starting on your journey, your entrepreneurship journey, a message to aspiring. Don't lie to yourself, right? Set yourself clear milestones as to what you need to achieve in a certain time frame. And if it doesn't work, be comfortable to walk away from it. Don't get emotionally attached to it. Because the challenge is, and this is from my own experience, is that if you get in too deep, then it becomes very difficult to walk away, right? And you keep on taking on more and more and more risks, right?
Yes.
If you're a young guy, fine, right? You can afford to do that. But if you have a family, etc., obligations, you need to be very careful, right? Because in your 30s, 40s, etc., these are your formidable years to make a living.
Yes.
And earn, etc., and so forth. And it's great if you can find something that's successful. And it's also, you need to be very clear from the start in terms of why you're doing what you're doing. Right?
Yeah.
It can't just be about making money, because then you will never be satisfied. Right. There has to be more than just about making money. But be true to yourself.
Yeah.
Hold yourself accountable. Hey, listen, I didn't achieve this. It's not going to happen, etc. Because there'll be people around you that will, and for that reason, you need to have really, really good mentors.
Yeah.
Yes.
Right? Not like so-called mentors, like real people that have done it, etc. They'll give you straight advice,
Yes.
right? And listen to them. Don't, investors, some investors are good, etc., right? But investors, they put money into you, they have a bias. They want you to keep going
Yeah.
at all costs to ensure that my money comes back, right? They're not
Yes.
going to tell you, hey, listen, Siddiq, it's okay, it's not going to work, man. Forget
Yeah.
it. It's bad. Yeah, I'll write off my investment, move on, do something else with your life, right? Not worth it. Most investors in this market won't say that. They were like, no, it's okay, it's calm, something happened, this happened,
Yes.
it's all right.
You'll get over
Keep
it.
it, you're doing a fantastic job. Because they want you to keep going to a point where eventually, hey, you'll figure out a way to get my money back,
Yes.
right? It won't go to zero or whatever, right? So you need to have really good mentors, etc., that give you the reality check. And it's okay if you have a failure, walk away, do something else for a time, come back, try a different journey, etc. There's nothing wrong with that.
It's interesting that you mention about investors, right? And you also mentioned that you're a novel concept. So how does that synergy work? Because, see, the idea is great that an investor can become like a shareholder of a particular property and get dividends out of it as if they're an investor, as a stakeholder. But it's a difficult sell to investors if you're the first of a kind doing it in the region. So how was that experience?
Yeah, it's challenging, right? Like raising money, regardless of something that has been tried and tested versus something new, it has its pros and cons, right? Like raising money, especially in the current environment, it's extremely, extremely difficult to convince people. It's all about proving, hey, is this product been validated? Can it scale? Can it make money? Can it be profitable?
Okay.
So you need to really have a plan in place in there, and there'll be different levels of investors at different levels of the business as well too. So it all depends. And when you're starting your business, you need to do your own homework as well too. It's like, hey, what kind of investors make sense for my business?
Okay.
Right? Because not for everything a VC is the right opportunity for you.
All right.
For some businesses, VCs make a lot of sense. For some things, maybe more, patient capital, private offices or institutions, etc. might make sense. So don't just chase money, right? There's
Be strategic about it.
Yeah, I say it's hard to raise money, but there's abundance of liquidity, etc.
Yeah.
We need to find the right money for you that makes sense for you, that will allow you to do what you want to do, with some governance in place, of course, right? But raising capital is a journey, right? I remember, when we sort of launched and we did our sort of pre-seed or seed round.
Yeah.
It was a very small round. This was back in 2018.
Yeah.
I felt top of the world.
Yeah. Definitely.
This is great. 6 months, we're going to rule the world, right? 2 years later, still trying to get a license. It's like crap. That money's running out.
Yeah.
And then the investor's like, well, hold on, you haven't done anything for 2 years. Yeah, well, because I've been trying to build a regular business.
Yeah.
It's taking longer than I'd anticipated.
Yes.
Now I need more money, but like, well, you haven't done anything for 2 years. So, having the expectations, clarity from the start, by mentors that have gone through this, etc., really help. And also, mind you, right, that was like 2018.
Yes.
Fast forward to, just before COVID or post-COVID, a seed round was like in the millions.
Yes.
Like crap, I maybe started 2 years too early, right? So these are cycles, right? But and you as a founder, it's very, very important that you're not doing this just to raise money, right? A lot of people think, I raise money is success. If you look at over the last 5 years and go look at Magnet, which is one of the data aggregators of startups, and go look at all the headlines of the big raises,
Yes.
right? And then do an analysis of how many of those companies are still around or are talked about, right?
Yes.
So you need to be careful, right? Obviously, you need to raise capital, and you need to spend that money wisely to achieve success. But you need to be careful, right? Because if you raise too much money too soon at very rich valuations, that can hurt you down the line. Because if you don't go into that valuation, etc., you're limiting your options.
Yes.
If you're steady, you do it properly, you retain options. That options could be, hey, I can raise more money at a better valuation. I can do an exit. I can do a strategic exit, etc. You keep your options open. If you get too rich, then it becomes a situation where your options are limited, where there's a risk of you walking away with not a lot of money, and you spend a lot of time and effort into building something, and then you don't have anything to show for it.
Certainly.
Yeah, I mean, getting that first round of investment seems like this big sort of like wall to overcome and climb.
Yeah.
But perhaps it's hard to actually see the clarity behind that.
It is, and it's just all going thing, right? So you get the money, depending on how much money you raise, you need to have very clarity as to why you're raising money, what you're raising money for, and what's the milestones you need to achieve with that, right? Because it's a never-ending process, right? You finish running, and you within a few months, you're like, hey, okay, I need to start planning for my next funding. So build businesses that are cash flow positive, that you can control your destiny, right? Because if you're building business, it depends on the business as well, right? Initially, you need some capital investment, et cetera, to get the business going. But try to get to a point where you can get to cash flow positivity, or at least be in a position where you can to cover your fixed overheads, et cetera, and manage your variables as you scale up and down, et cetera. Because then that allows you to have more options, more leverage when you're negotiating. Yeah. If you're completely 100% reliant on third-party money to sustain, it becomes quite challenging, right? And then because you don't control the market.
Yes.
Sentiments can change on a dime, right? There's many instances where we're in a position where, hey, everything is done, and then, market changes, sentiment changes, people get cold feet, and things move around, and that puts you in a very difficult situation. So, as much as you can keep control in your hands, it's easier said than done, right? Like I'm saying all these things, but in reality, there's so many moving parts as a founder, that you're trying to run a business, trying to raise money, trying to have figure out, hey, when do I need the money? What do I need money? Like how I'm gonna translate this into what I need to translate so I can go raise money. And you can have plans, but reality, sometimes
different.
It's very different. Yeah. You get punched, right, multiple times, and like, oh, crap, that goes out, and I gotta redo the plan.
Battle scars, yeah.
So have some clarity. Have some clear goals. Make sure you're surrounded by good team members that are all aligned on working towards that common goal, and try to hit your milestones. And investor expectation is very, very important, right? Yeah. Because keep them informed. As difficult of situations are, be completely transparent, honest, and open, because that will really help you throughout your journey.
Yeah. Okay. You said you took 2 years to get your license. Not you, but obviously the processing takes time. Do you feel like that barrier to entry protects your IP a bit more?
So we were the first ones, right? So, first mover advantage, I'm not sure how true that is, right? Because we've paved the way for many others to follow.
You act as validation.
It took us 2 years to get to where we needed to get to, all the legal, regulatory frameworks, etc. The next person coming in will probably take 8 months.
You think so? Really?
Because it's already there's a blueprint now as to what needs to be done, right?
So it's like a barrier to entry, but you just opened the gate.
Yeah, so
it's like not really
exactly.
Yeah. There's pros and cons to that, right? Pros in the sense that you're pioneers, you get the seat at the table, you build a lot of credibility, etc. You've done it. But then the con side is you made it easier for everyone else, right? And keep in mind, right? So the next person coming in is coming much later.
Yeah.
The market dynamics are different. They can raise money easier. They're raising probably bigger rounds, and they're not spending as much because they don't need to wait 2 years.
Yeah.
To
Keep
educate the
lights on,
market
et cetera,
also, because you've done all the hard work.
Exactly.
Yeah.
It's not
So
always
their
who
money can
does it
go
first.
longer than your money can because you've been trying to build the infrastructure, etc., and so forth. So there's pros and cons, right? So, for example, we're going into Saudi. We're not the first ones in Saudi.
Okay.
Like, let someone else figure this out in Saudi, and then
Yeah.
hey, we'll just come and piggyback. And
Yeah.
and it's been great because now there's a couple of players in Saudi. And now we have a pretty good understanding as to what works, what doesn't work, what are the challenges. Like, hey, we'll bring a product that makes more sense and it's better. Has a better competitive advantage than the peers that are operating in Saudi, that we can have some sort of an edge. So these are lessons learned, and you got to take advantage of those situations. I don't regret being the first one. I think there's a level of pride in that as well too. We have first of many.
Yes.
That in our feather in the cap. So it's quite proud, and for our team as well too. It's a quite proud thing to say that, hey, we were the first ones to do this. We were the first ones to do X, Y, Z, etc. And it's good.
Yeah.
But, you still
It's good. It's good to be the first ones, but it's also very important to be the ones that are doing it best.
Correct.
Yeah.
Equally so.
100%.
So as a layman, right, I would think that you're already locking horns with the real estate giants over here, real estate marketplace platforms, for example, Bayut or Property Finder. So are you targeting a specific niche, as that's how you're differentiating yourself from a big market?
Yeah, so a big difference between what we do and what these marketplaces do, right?
Okay.
So marketplace like Bayut and Property Finder, those are more your search engines, your awareness, right? Like you go do your searches, etc. Market education. We are a transactional platform,
Yeah.
so very different, right? I actually fundamentally believe everything is going to converge towards fintech in the long term, right? Because everything's becoming transactional,
Yeah.
right? With the whole advent of digital currencies, digital economy, etc. The big tech giants are already moving into that. Apple's,
Yeah.
Facebook's of the world, Microsoft, etc. So everything will become transactional. When you talk about transactional exchange of money, everything will have a fintech sprinkle on it. So maybe Property Finder, but you might like to get into what we're doing
Yeah.
at some
That's
point in
a
time in the future.
strong
But
possibility.
they have to understand, because they're unbiased, right? They're just a marketplace for anyone to come and list. We have a process in terms of there's a vetting process. We evaluate opportunities, things that make sense only go onto the platform for people to invest in, right? So our clients are, we have a fiduciary duty to people that are coming onto the platform, putting money on to the platform, right? We don't just put any real estate that comes our way, et cetera, and so forth. So it's a very different concept. We're more of an investment product,
Right.
where that is just sort of a marketplace for search engines, et cetera, and so forth. It's a very different space altogether.
Right.
Okay. Well, we're quickly running out of time here, so I think I'll just leave you with this one question. Do you have any nuggets of knowledge that you'd like to leave with our viewers?
Yeah, so I have 4 P's of entrepreneurship. Right?
Okay.
I'm going to write a book on this one day,
Yeah.
right? And if you're going to put this somewhere, please tag me because I want to make sure that it's coined towards me.
Yeah.
All right, mate. Consider it done.
Yeah, so 4 P's of entrepreneurship. The first one is you need to have a clear purpose in terms of why you're doing what you're doing.
Yeah.
Right? It can't just be about money, right? So you need to really define your purpose, and it's okay, right? Like purpose, I tell my kids, right? Like, hey, you're young, it's okay. Your purpose can come later in life.
Yes.
But we need to know what your purpose is, because from that purpose will come passion, right? And passion is very important, because without passion, you're not going to be able to persevere and be persistent. That's the 3rd P, right? Because you're going to get knocked down many times. You're going to get lots of no's, and if you don't have a clear purpose and you're not passionate about it, you're going to give up on the first turn that becomes difficult. You're like, I forget this, I'm out.
Yeah.
Right? So that's very important. And the last one is patience.
Patience. Yes.
Things don't happen at the speed that
Overnight.
you want, right?
There's no overnight success.
It takes time.
Yeah.
So those are very key critical things, in my opinion, for any budding entrepreneur or even someone that is an entrepreneur. Get those 4 right, and I think you will do quite well.
Fantastic.
Awesome.
Thank you so much, Siddiq, for joining us.
So
on
thanks
the
for
show.
having me. This was
really
fun. Enjoyed this.
educational. Amazing.
Likewise, it's been insightful. So
Great,
thank you.
perfect. Thank you.